welcome everyone to Super 25 3.0, India's largest retail traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you to Super 25 3.0. I'm sure by the end of this program, you will have extensive knowledge to make better decisions in your trading life. Let me thank our media partner, Money Control Pro, the largest financial portal in India with millions of daily readership on their website. They helped us to reach a wider audience in a short period of time. I would also like to thank and appreciate our title sponsor, Espresso, from the family of 𝐒𝐩𝐞𝐞, one of the leading stock brokers in India with millions of investors as their customers. Friends, the speaker for today is Mr. Nuresh Mirani from Mumbai. He's an IT engineer from Mumbai University, a blogger, advisor, educator, and trader by profession. He's a SEBI registered investment advisor. He has been in the blogging space for close to 12 years. He expresses his technical views in his website nureshtech.co.in on Indian equity markets. He has trained more than 2,000 people on technicals over the past 10 years. Nuresh, it's a great pleasure to have you on board as a speaker, as the first speaker of Super 25 3.0. We look forward for an interesting session from you. On behalf of Traders Gurukul, Money Control Pro, 𝐒𝐩𝐞𝐞 and 𝐒𝐩𝐞𝐞 Espresso, I extend my warm welcome into our program as an elite speaker. Go ahead, sir. The stage is yours.
Thanks a lot, Ashok, for a kind introduction. To start off with, before I start on the topic, which is insider trading disclosures with technical analysis. So this time I'm trying to present on something which is different from what we have always been looking into in technical analysis, focusing only on the aspect of technical analysis. What we've learned over the years in the last, say, spending almost more than a decade now, or rather 1.5 decades, so got full-time into the markets back in 2007. So it's been 15 years into the markets for a living. What we've learned is how do we keep increasing our horizons and use various other aspects along with technical analysis, and how it adds a lot of edge to your trading and investments. So that is where I'll be starting off with insider trading disclosures with technical analysis. So why the first part is why look at anything beyond technical analysis? Now the classical problem is technical analysis focuses on the number of stocks which are there in the market, right? We are not just trading indices. We are open to the whole markets, the whole world. Now, on NSE itself, there are 1,500 to 1,700 plus stocks. Now, if you run all your screens, all your analysis, there will be a lot of stocks which will pop up in a bull market, bear market, which look good or bad. Now, how do you create a universe which is where you have a great alignment in terms of higher hit rates and bigger moves? So that is where we try to do technical analysis and beyond. So that is where you go into trying to do sectoral analysis, trying to understand themes, and then see it play out on the charts. So that is what we try to do over the years, whereas we try to mix a lot of data points as well as all what you know about the markets, but the final frontier being technical analysis for you to make decisions. So why look at insider trading? So this is one more tool which is all the data for insider trading disclosures is available freely on the exchanges itself. So you can go to BSE India, you will get a daily update on it. You can download it in Excel, run screens. So it's not something, the name says it is insider trading, but it is not something where we know about insider, but it is the disclosures. So what does an insider mean? So in simpler terms, all the persons who are in the management, the promoters of the company, people who are working in the company, and anyone and everyone who could have undisclosed price sensitive information. In simple words, you would say insider is someone who knows about the company more than we do. So, and anyone taking a trade or say an execution of a buy or sell in the company where they are insiders, it has to be disclosed, and this disclosure is coming. So why do we look at insider buying? So we focus majorly on insider buying. Now, India is not a country where there is a risk of hostile takeovers, right? So a Twitter cannot happen in India so easily. So if we simply put, if you have management control in India, there is hardly any risk of hostile takeovers. Otherwise, there are a lot of holding companies which say trade at a discount to the parent company, and you could buy the holding company a large stake and do a hostile takeover. So all those things have not happened. There is hardly any history of hostile takeovers in India. So if you already have management control, you don't need to increase your stake and take it to 50%, 60%, 70%, right? So if you're already having management control, why would you buy more shares? So what could be the reasons for an insider to buy a stock in its own company? So maybe the stock is undervalued at these prices. The future is superb. There could also be a case which is where, say, you have unofficial holdings. So this is the Indian Jugaad. You have holdings in Benami accounts. This could be ages old. You could convert it into your official names. It could also be exit to family members, funds, PE, etc. At times, there is a succession wherein one part of the family wants to exit. There are funds which we have invested with the company maybe 5-7 years back, and they have an exit clause. So that could be another reason. Then there are times when there is just market signaling. So there is a bad news in the company. Promoters buy minuscule quantities just to signal that at these prices we are buying into the company. At times it could just be reinvestments of dividends, salary, etc. But the fact is, you don't need to do insider buying as much in India as promoters of the company. Also, trading in its own companies is taken very negatively. So you can't expect insiders to be buying at X price and selling it 20% higher, 50% higher, and that too minuscule quantity. So there can be many more reasons to it, but there's a good chance there is something interesting happening in the company. Now, promoters can buy but never sell. It's a one-way road. So buying from the market is seen as a good sign, but selling by the promoters in the open market is not generally taken well by the markets. So that's an indication which is taken negatively. So you don't want, as a promoter of the company, you don't want to sell 1% of your company and take the valuation hit on 50% of your equity in the company. So, and more so in a sideways or a falling market, any negative selling by the promoters could take a quick crack. So generally it's a one-way road or long-term money that promoter parks in his own company shares. So it's extremely rare to see promoters trade in and out of the company. So the word actually does not sound well, insider trading. It should be called insider investing, because that is what is happening most of the times. There will be certain cases of employees getting ESOPs, which they buy today, sell it tomorrow. So we'll be focusing more on the promoters and the management, not the ESOPs, because ESOPs are almost like a quasi salary increase or an incentive, and the employee may not have that much amount of money to hold on to the shares. There are bridge loans, etc. So we like to prefer looking at promoter buying. So the reason I'm explaining all this is so that you understand how it works, and there have been multiple examples of really big moves which could be caught via an universe of insider trading companies where there has been insider trading and buying them on technical breakouts. So now, why is this very interesting, that insider value? So the company can have a market cap of 1,000, 5,000, 10,000 crores, but the cash flow to the promoters is only through salary and dividends and say profit share, etc. So the market cap could be a big number, but your dividends and salary is not a very big number. So the actual cash flow of the promoter is not necessarily high unless he has multiple other businesses. So the salary range we've seen is maximum is say 100 crores for one of the most say largest companies which pay up their promoters, that is Sun TV at 87 crores. But there is also a SEBI cap, etc. But the fact is, this is not a huge number for a company. Now, also over the years, the net cash accumulated by the promoters is not a big fraction of the market cap, because again, dividend yields are 2% to 5%. So when a promoter buys a significant percentage of the company, a lot of personal cash flow has been invested back with a longer term duration, which does not have a clear-cut exit strategy as such. So we look at insider trading in two manners. One is absolute value of buying, say how many crores has the promoter bought worth of it, because 20 crores is 20 crores, because like I said, the maximum salary is 50-80 crores. So 20 crores is a huge number, a few crores is a huge number, but somebody buying say 5 lakhs worth of company shares doesn't make a difference. Then next we look at percentage of equity bought. So if the company is 500 crores, say even if the promoter has bought 2%, the value could be 10 crores, but it's 2% of equity. So so I've been looking at bull deals and insider trading for the last 15 years, ever since I started. And why did we start looking at this example? So over the years, I discovered a lot of companies which did really well, where promoters had bought a significant amount of stakes from the open market. So Aarti Industries, the promoters bought almost 5% of equity. They converted warrants, they bought from the open market. Then later on, they merged a company in the same line of business. Governance went from almost very low governance to great governance over the next 10 years. The stock has been at 30x since then. 𝐶𝐤𝐞𝐚𝐤𝐞𝐫 Limited, there was a generational change. The next generation came in. The promoters bought 5% of equity from the open markets. Stock used to be available at 0.1x sales. And the stock from those prices went up 15 to 18x over the next few years. RPG Life Sciences, another 𝐒𝐩𝐞 Group company, promoters bought a good percentage of equity. We saw it go up 5x over the next 3 to 5x over the next few years. One of my first indications was a company called Supreme Industries. Right in the bottom of 2009, they came out with the open market buyback in 2009. And since then, the stock became a 50x and became one of the most, say, loved company in those 5-7 years. So there are many such examples. There could be Atul Limited, very recently a Polyplex, many other names over the years. And what we've seen is some of these companies go so large multiple times, and also the trends are superb. So you could have participated at Aarti at multiple times over the next few years. Many of these companies you could have bought in at multiple times on technicals. Now, what do we do is we look out for this. The first part is look out for companies where there is insider trading. Look out for promoter buying. Make an universe. So this is the simple process. Make an universe of companies where there is promoter buying. Then track them on technicals. So what happens now is you get a good universe of companies where interests are aligned. So generally there are a lot of positive assumptions with promoters buying into the company. So promoter knows better than we do, etc. And there is a history over the last say 10-15 years. You can go look back into the data. Wherever there has been good promoter buying, your chances of those companies doing well over the next few years is better. So, and generally this is a universe of mid cap and small cap companies, because in a 1 lakh crore market cap company, doubt the promoters have a huge amount of money to do any stakes, etc. So there are a lot of ESOPs, etc. So this is a universe of mid cap and small cap companies, and it gives you a universe which you can keep tracking out for technical breakouts. So, and then what happens is you cannot understand the whole 1500 plus companies. So when you have choices, you look at this universe, this breaks out, you know your hit rate is going to be higher. So where the say the promoter is aligned, because the biggest concern all of us have in small caps is you don't want to be holding the bag at the end of the bull market, or the stocks falling 30, 40, 50%, and worst, never coming back again. So buying companies where there has been promoter buying at least gives you some sort of comfort and conviction, and you're buying it on breakouts, trend changes, and other technical reasons. Whichever you look at, volumes, you can look at chart patterns. What happens is this gives us a very high success rate, because the number of breakouts in such companies failing is extremely rare. The next part, the point is, many of these companies go into big moves. At times you'll see sectoral moves where all the promoters in a similar sector are buying more stock of their own company. 10. So the first part is